Look no further, my friend. This blueprint is the key to unlocking your financial success and building an impenetrable fortress of wealth. It's time to take charge of your financial destiny and launch your money rocket into the stratosphere of investment opportunities. With this blueprint by your side, you'll become the superhero of your own financial story, soaring above the competition and achieving the security, freedom, and lifestyle you've always dreamed of. Trust me, this transformative ride towards financial success is worth every penny. So let's buckle up, blast off, and conquer the world of wealth creation together. Paying yourself first, a blueprint for financial freedom, the concept of paying oneself first, as elucidated by Robert Kiyosaki in his book, Rich Dad, Poor Dad, is a cornerstone for achieving financial freedom. Kiyosaki distinguishes between the habits of the financially struggling, who pay themselves last, and the financially successful, who prioritize self-compensation. By allocating a minimum of 10% of one's income to a savings account immediately upon receiving payment, individuals can ensure they are securing their financial future before addressing other obligations. For instance, consider you diligently practice the habit of paying yourself first. When you receive your paycheck, the first thing you do is allocating a predetermined 10% directly into your savings account. This disciplined approach ensures that you are not merely an afterthought in your financial equation. By treating your savings as a non-negotiable bill to be settled immediately, you build a financial safety net, fostering security and freedom. This financial strategy extends beyond mere saving. It's a conscious decision to prioritize your future and long-term goals. As Kiyosaki aptly puts it, this practice shifts the mindset from a reactive scramble to meet immediate expenses to a proactive investment in personal financial well-being. Paying yourself first is not just a financial maneuver, it's a mindset shift towards financial freedom and a self-assured future. Debunking the myth of bad debt. In an era where debt has become commonplace for even the most trivial purchases, it's crucial to reassess our approach. Using debt to acquire items one can afford to pay in cash is a risky financial behavior. Credit card companies thrive on individuals mishandling their finances, often charging exorbitant interest rates. To break free from this habit, it's essential to adopt a mindset that prioritizes responsible spending and avoids unnecessary debt. For instance, adopting a cash-only policy for non-essential purchases becomes a tangible strategy. If you, recognizing the pitfalls of indiscriminate credit use, decide to pay for your luxury purchases only with cash you have readily available, this deliberate approach not only safeguards you from accumulating unnecessary debt, but also fosters a sense of financial discipline. By dispelling the myth of bad debt, we can reclaim control over our financial destinies, cultivating a sustainable and responsible approach to spending that aligns with long-term financial goals. The key lies not in avoiding debt altogether, but in discerning between prudent and imprudent uses of credit, thereby paving the way towards financial well-being. Building a financial buffer. Creating a financial buffer is paramount to weathering unforeseen challenges. By adhering to the principle of paying oneself first, individuals can accumulate a 6-month buffer, providing financial security and flexibility. This buffer serves as a foundation for venturing into investments, a crucial step in wealth building. Now let's talk about the magic of a financial buffer. Picture this. You've diligently set aside that 10% over time, and suddenly your car needs unexpected repairs or there's a surprise medical bill. Instead of panicking, you dip into your financial buffer, a pool of savings specifically for moments like these. Having patiently built this buffer, you find comfort knowing that you can handle life's curveballs without jeopardizing your financial stability. But here's the real superhero move. That financial buffer doesn't just sit there. It becomes the launch pad for your wealth-building journey. With a secure foundation in place, you can confidently explore investments, knowing that you've got a safety net beneath you. In the world of personal finance, Building a financial buffer is the sidekick you didn't know you needed, providing not only security but also the freedom to pursue long-term financial goals. Understanding your income and expenses. Imagine your money as a team of superheroes, each playing a unique role in your financial journey. To ensure this team works together smoothly, you need to understand each superhero's strength. And that's where understanding your income and expenses comes in. Let's say you decide to become the captain of your financial team. You start by making friends with two superheroes, income and expenses. You take the time to know them inside out. How much money comes in, income, and where it goes, expenses. By doing this, you avoid the sneaky trap of lifestyle inflation, where spending grows as income does. Now, let's break it down. Armed with a clear understanding of your financial heroes, you begin tracking your assets, the things that put money in your pocket, and liabilities, the things that take money out. You set specific financial goals, a mission for your team. Whether saving for a dream vacation or tackling those student loans, your team knows exactly what they are fighting for. Here's the magic. You, with your superhero team in perfect sync, could make informed decisions. No more financial surprises or wondering where your money goes. By knowing your income and expenses like the back of your hand, you become the superhero of your financial story, building sustainable wealth and achieving your money goals. Understanding your financial superheroes. It's not just a step. It's your secret weapon for financial success. Disciplined spending habits. Think of your money as a garden. How you nurture it determines the fruits it bears. Disciplined spending habits are like the careful tending of that garden, ensuring it thrives and blooms. Let's stroll through your financial garden to understand how this works. You realize that your love for shopping was like a mischievous weed threatening your financial flowers. You decided to put on your financial gardener hat and practice disciplined spending. Rather than giving in to every impulsive purchase, you choose to cultivate a balance between saving and making more money. Picture this. You enjoy treating yourself to a cup of fancy coffee every morning. Instead of cutting this joy from your life, you decide to get creative. You start a small side hustle selling your homemade specialty cookies to friends and neighbors. This not only adds a sprinkle of extra income to your garden, but also turns your hobby into a money-making flower. You don't stop there. With your disciplined spending mindset, you evaluate where you can cut unnecessary expenses, like opting for a homemade lunch instead of ordering takeout every day. These small changes act like watering her financial garden. Each drop counts. Disciplined spending habits aren't about saying no to everything fun. They're about saying yes to financial growth. By nurturing your money garden with a mix of saving, making more money, and wise investments, anyone can cultivate a financial haven that flourishes and stands resilient against the weeds of overspending. Timely entry into the world of investments. Imagine your money as a rocket ready for liftoff, and the launch pad is the world of investments. The key to success is not waiting too long to press the launch button. Let's journey with you to understand why timing matters in the exciting world of investments. With your newfound financial knowledge, establish a financial buffer, your rocket fuel. Now, instead of letting it gather dust, you decide it's time to aim for the stars. Delaying this decision, you realize, would be like keeping your rocket on the ground while others soar into financial galaxies. The rocket, in this case, symbolizes your money. Leaving it idle in a bank account might seem safe, but there's a catch. Inflation, the silent financial villain. Like a black hole, inflation gradually erodes the value of money. To protect your rocket from this gravitational pull, you must venture into investments. Diversifying your investments is your next mission. You decide to allocate a portion to stable stocks, a chunk to bonds, and even a bit to the riskier but potentially rewarding world of startups. Just as a diversified spaceship can navigate different cosmic challenges, a well-diversified investment portfolio helps you weather financial storms. Timely entry into the world of investments, you will discover, is not about being a financial wizard. It's about seizing opportunities when the launch window is open. By making your money work for you, you propel your financial rocket into the vast expanse of wealth creation, ensuring it doesn't stay tethered to the ground, lost in the gravitational pull of missed opportunities.